Yeah, so it's the CRUX UK Special Situations Fund. We're trying to beat the market long term by 5% per annum. We're looking for growth businesses, but we're looking to buy them at really cheap prices. Okay, so there are always special situations. We've got a multi-cap approach, so we'll buy micro-cap, mid-cap, small-cap, large-cap. And from different phases of the market, then there are different opportunities. So when the market is really buoyant and the economy is buoyant, then sometimes it can be IPOs, new issues. Fewer of those at the minute. The market's quite depressed. But that's an opportunity on the basis of price. We're trying to buy growth companies at low prices. Quite often there's long-term growth companies, some of which need a little bit of money. Often the prices are going down to reflect that, and we can get involved at very low prices. So we're doing quite a lot of refinancings at the minute. And in the past, that's been very lucrative for me. I made a lot of money in 1998, 2003, 2009 by buying these companies in a difficult market. And it feels like that kind of market right now in 2019. A good business for me is a business that can compound. So we're looking for growth, but we like them to have good return on capital as well. So we'd obviously screen for those and have a minimum return on capital of sort of 12 to 15%, but obviously we'd like more. Obviously we have a screen for growth and long-term growth. Sometimes we might buy a business that's having a year off, but where the long-term potential is 10, 15, 20% per annum. And then in the smaller companies, sometimes they're looking for businesses that become the next compounder. So they might have business models that I've benefited from before. So software, IP heavy businesses like medical devices, I've done well in. Sometimes things like ports. Often the types of businesses where you build it once and you can sell it many times, and so the return on capital will go up. But having been involved with these before, I know that the business model can be effective. Well, I mean, firstly, don't overpay for things. I did very well by buying companies cheaply in 98 and 2003. In 2001, I didn't do so well. In fact, I lost money when I owned things that had been good for when the market collapsed. So you have to own things at the right price. And then make sure that the companies are capable of delivering on the promises that they give. It's quite easy for a small business to promise even a modest level of profits, but even though 2 or 3 million at times might seem like a little, it's often very difficult for them to deliver it. It's best to deal with people who are aligned with you, who own shares, who make promises that they deliver. And then finally, the rules of buy low and sell high. Everybody says they do it, but the times when people say the market's broken or the rules don't apply, so this could be the bottom of the market or it could be the top of a boom, are the times when you must do that more. So right now, it's kind of quite difficult in the UK in certain areas of the market, but people who say the market are broken will miss the opportunities because now is the time to buy low. Just taking the various multi-cap approach, so in JD Sports, which is a more sizable business that we own, it's got very high return on capital, around about 30%. It's sort of one of the best of breed retailers in the UK. Of course, UK retailing is a bit out of fashion, cyclically and structurally. But I think it was December last year, ASOS had a profits warning, and all the retail shares came off. And JD Sports, the directors were buying it. That prompted me to get the file out, have another look. Great return on capital, long-term growth. So we bought those shares, and it's one that we'll continue to own. On the smaller side of things, in the microcap, about 100 million, a business called MaxCyte. That's kind of, if you like, a crossover play between UK undervalued and the very expensive American stocks. It's involved with gene therapy, which is a very current area. The gene was sequenced in 2003. That whole process should be a huge driver of medicine over the next 50 years. MaxCyte is a portfolio play on that. They provide equipment to 20 of the world's top 25 pharma companies, and they have a royalty and milestone play on that. So I was born in Yorkshire, so I don't like paying too much. My background was engineering, so I'm interested in engineering, computing, building, those kind of areas, and that's always been with me through my career. I started off in Scotland 26 years ago. I've seen pretty much 250 companies a year for 26 years. I've done well buying growth companies, and I do better when I pay lower prices for them. So the highlights of my career would have been 98 and actually 2008, 2009, by being a bit contrarian on some of these growth stocks.